Tricks and tips for day trading. An easy approach to build your watch list. Day traders must keep updating their watch list daily at minimum. Take a few hours and do some quick volatility research of all instruments available with your broker. We want to write down somewhere that average hourly move and best session to trade for each pair. Select only the instrument that you plan to trade. I say select only the instrument that you plan to trade. I mean, find the instruments that usually move during the time when you are trading. So if you're trading during the UK session, only select the pairs that usually move during that session. And you can easily skip, let's say, the Asian or the US session. For day trading, only use H1 or M30 as your time frame for checking phases. Early exits. There are a few ways how to know when to cut a position early. For now, we are going to focus only on two ways that don't require a lot of hard work. First, with the EMA, wait for the first test of the 13 EMA. After that, we are going to watch the close of the candle above or below the EMA as the time to exit a trade early. For long trades, waiting for the price to close below 13 EMA, and for short trade to close above the EMA. This approach works on S1, S2, and the S3. Second option, watching for the opposite side signal. If we are in S1 or S2 trade, we can watch for the S3 showing the opposite direction as potential sign for early closing a trade. This approach works great if you search S3 on one higher time frame. So if you set up the trade on the 15-minute time frame, go to the half-hour or 1-hour chart to search for the S3 formation. Here is example. We can see a Kiwi dollar S1 play after that breakout. So first test of the EMA happened here. Until we get that first test, you really don't need to worry about anything. After that, we are looking to see if price is going to break, in this case, above the EMA, and that happened after a few candles. So during that time, you can either close the trade early or at least move the stop loss to break even. Early entry points. We have the option to enter a setup right away for all setups, but this can only work for S1 and S3 setups. S1 early entry, over 95% of the time. RSI breakout, that optional confirmation for S1, will happen before price breakout. After that is confirmed, feel free to enter a trade. S3 early entry. Try searching for reversal formations like double top or bottom and wedges during the time of S3. Once found, look to enter a trade at the time of the formation breakout point. So let's get back to that same trade, that Kiwi dollar short. So we have the white line represent that price breakout point, but as we can see here, RSI breakout happened 1, 2, 3, 4, 5 candles earlier. So after you get that RSI breakout, you can enter a trade right away. This will help you with your overall risk reward. And usually, instead of getting just 1 to 3 risk reward, this way you will get 1 to 4 and a lot of times 1 to 5. Understand when to skip a trade. There are not many reasons, if everything is aligned, to skip a good setup. But overall, you should pay attention to trading in some scenarios. We should look to skip trading during the late New York session, 2 to 3 hours before US close, and early Asia, first hour only. During these times, the market can be choppy, so we can see a lot of fake signals. Trading during any high-impact news events can be hard even for professional traders. Try skipping placing any new trades 15 minutes prior and after such releases. As we can see on this chart of the pound dollar, we have marked 3 places when you should avoid your trading. From these 3 times, only that middle part had that S2 signal, and I wouldn't consider that as a potential trade, even if everything was aligned, just because we know that we are in that late US session, so market can be choppy. So just skipping the trade, waiting for a better time to trade. We need the volatility, we need the market to make a move. Your perfect risk setup. We must understand that as day trader, we expect to have a good quantity of trades per month. So our risk profile will be smaller at the start. Risk profit for day 0 to 90. So for the first 3 months, we want to go with the risk per trade being 0.5% only, risk per day 1.5%, risk per week 3%, and risk per month 7%. You should just set your ND10X risk test to help you avoid overtrading. After you learn and master our ND10X system, we can go and slightly increase our risk. But still, we don't want to go too high just because we are really going to have a lot of trades. I think that we are going to have between 50 to 80 trades minimum per month. So we are going to keep the risk per trade to 1%, risk per day at 3%, risk per week 5%, and risk per month 10%. The most important part here to remember is that it doesn't matter if you have a small or large account. I would suggest that you use the same risk profile for both of them. Best time frames for day trading. From our testing of the ND10X system in the last year, the best results have been seen on M5 and M15 timeframe for day trading. You can use the combination of the timeframes for each setup. Have opened M15 and M5 timeframe of the pair you want to trade. Just remember that higher timeframe should be your primary plan, and use the smaller timeframe as a backup during the slow days. Train your consistency. Day trading requires a lot of discipline and practice. To make sure you master this kind of trading style fast, you'll need to start doing the same things over and over again. We should focus on trying to trade during the same time for a minimum of 3 weeks. We want to push between 2 and 5 setups every day without breaking a single rule. Make sure to write down all trades in your trading journal so you can keep a track of what you are doing. Important: if you decide to master day trading first, don't try mixing it with swing trading.